to everyone. Members of SMCC, CCIFM and Camara, guests, thank you very much for attending our Economic Outlook 2022. It's really great to see you all, even if it's online. We wish that we could have that event physical, but certain circumstances didn't make that happen. I hope next year it will be as usual in the physical format. As in the past, this event is jointly organized by SMCC, CCIFM and Camara. And I would like to thank everyone involved in organizing and supporting this very interesting and popular event. In particular, our Vice Chairman, Ms. Pauline Go, as the main person behind it, as well as Michel, Lozach, General Manager CCIFM, and Mr. Jordi Paul, Chairman of Camara, for their continuous support and cooperation. Very warm welcome and thank you to our two speakers, Mr. Werner Bardill, Deputy Head of Missions with Embassy Kuala Lumpur, who will give an overview of the economic situation in Switzerland. And of course, our main man of today, Dr. Anthony Das, Group Chief Economist, Head of Research at Ambank, who will give us his take on the economic outlook for Malaysia 2022. Anthony has been our economic outlook speaker for many years, and we really appreciate his time and insights, and I'm sure we will have a very interesting presentation again this year, also with the usual Q&A session at the end. With that, I would like to invite Michel from CCIFM to say a few words. Thank you very much again to all of you and have a good event. Thank you.
Good afternoon. Thank you, Simon. Thank you very much for your hospitality, for welcoming us again. We are very happy to have this yearly collaboration. We're also happy to have Spanish. A warm welcome to all the members of the three chambers who are here today. We hope that everybody will be able to connect. Little by little, we believe that we might see the end of the tunnel. So on the 1st of April, the border will reopen. So we hope for more mobility. So far, the last 2 years have been difficult for everyone. You know, as far as the French business community is concerned, we have about 2/3 of our business presence, which is represented by subsidiaries of companies from France. We have also 1/3 coming from entrepreneurs, Malaysian French entrepreneurs who set up business in Malaysia. And I will have to have a special thought for them because the last 2 years have been very difficult for our entrepreneurs, and I think it's the same for the Swiss on Spanish one. So hopefully the situation will be improving. We have a lot of hope at the level of the chamber. We see more and more inquiries, so hopefully 2022 will be positive. Anyway. The collaboration with our other European chambers is very important. Collaboration also with the Malaysian, the French, and our national authorities is also very important. Everybody together, working together, we should be able to achieve a good result, and this is the way out. I will stop here, and I will again thanks to everyone for being with us, and thanks to Anthony for his yearly update on the economic situation. And without further notice, I will invite Senior Jordi Paul, Chairman of the Malaysian Spanish Chamber, Camara, to take over. Jordi, this is for you.
Gracias, Michel. And first of all, thanks to our Swiss friends again for having us in this special event. We are so happy to be all together in this particular context of unfortunate war in Eastern Europe. And I think that it's very important that chambers together, we facilitate this dialogue.
How do we go to setting again? Tell me how to go to setting again. Here, setting. Okay, apparently there's something we can do. Wait.
I think that there is some mics on. Yeah. Hello. Okay. So then going forward, again, as I was saying, can you guys hear me? Because I am hearing a lot of other voices in. Yeah.
Yes. Proceed, Jordi. Yeah. Good.
Okay. Okay. So then again, thank you very much. And as I said, it's important that we're all together in this particular context. And I think that this exercise that we are doing as chambers to talk about our participation in this Malaysian community and to do this economic outlook is very important in order to see how we can balance trade and at the same time support to both communities, Europe and Malaysia. Then it's been difficult for a lot of the Spanish companies during these 2 years. Yeah, some left, some others came in. And as Michel was saying, some entrepreneurs also came in. And thanks, the exports of Malaysian goods to Spain grown, but yet the imports of Spanish products in Malaysia dropped. Yeah. So we are looking forward to hear from Anthony how we all can improve this situation and then help Spanish companies to come over to Malaysia. We still believe that Malaysia is the perfect platform for ASEAN business. And we need the insights from our friend Anthony to inform these new investors to come over here. So having said all that, thank you very much again. I'm so happy that we are here and looking forward for a very constructive workshop today. Thank you. I'll pass it over to Pauline.
Yes, thanks a lot, Jordi. Yeah, I'd like to introduce Mr. Werner Bardill, who is the head of the deputy head of mission for Switzerland to Malaysia to share the short overview of the economic situation between Malaysia and Switzerland. Over to you, Mr. Bardill.
Yes, thank you very much and good afternoon. So maybe my presentation can be started.
Tina?
So we can start with the first slide. All right, thank you very much. Good afternoon again, and a very warm welcome from the Embassy of Switzerland. Thank you for the opportunity. Sorry, I've just lost connection. Sorry. Thank you for the opportunity to again give you a brief overview of the economic situation in Switzerland and bilateral economic relations, as we did in previous years. I'm standing in for Ambassador Andrea Reichlin today. Next slide, please. After a severe economic slump in the Corona year 2020, with a minus 2.4% of GDP, Switzerland's economy has recovered strongly in 2021 at for the time being provisional GDP growth of 3.7%, actually the highest figure in 14 years. So Switzerland compares favorably with other countries when it comes to recovery from the Corona pandemic. Recovery was particularly strong in spring and summer of last year, after GDP declined in the first quarter due to a lockdown. Then the following 2 quarters, the economy picked up again strongly with growth rates of 1.8 and 1.9% respectively. And in the last quarter, recovery continued at a moderate pace as the domestic economy was hampered by the latest Omicron wave. Industrial growth, meanwhile, was buoyant, driven largely by the chemical and pharmaceutical sector. But as elsewhere, international supply and capacity bottlenecks are putting pressure on all industries. Economic observers generally assess the outlook for Switzerland as good. So the expert group of the Swiss government expects above average growth of 3% for this year. This should also return the economy to the growth path it would have taken without the Corona crisis. Economic growth should continue, driven by catch-up effects, not only in consumer spending and investments, but also in exports. In the second half of 2022, these catch-up effects will then weaken and the economy is expected to normalize. Of course, and obviously, there are a number of risks that could hamper the recovery. The further course of the pandemic, interest rate hikes, the geopolitical situation, to name but a few, and those further disruptions to the supply chain and rising inflation, make these forecasts uncertain. The extent to which the crisis in Ukraine will affect the global economy, and therefore Switzerland, depends obviously on further developments. The Swiss government has taken the decision to adopt the EU sanctions against Russia. A word about unemployment, in tandem with the economic recovery, the unemployment rate is expected to fall further to an annual average of 2.4% in 2022. And compared with other countries, the inflation rate in Switzerland remains moderate. In 2021, it averaged at plus 0.6%. For this year, slightly higher annual inflation of 0.2 to 1.1% is expected and is driven primarily by the rise of commodity prices. And next slide, please. When we look at the total bilateral trade between Switzerland and the ASEAN countries, Malaysia ranks again on the 4th place behind Singapore, Thailand, and Vietnam. Last year, actually, Malaysia was overtaken by Indonesia. This was basically the better ranking this year for 2021 is basically due to the significantly lower bilateral trade with Indonesia, whereby bilateral trade with Malaysia has increased. And next slide, please. So when we look at the bilateral Swiss-Malaysian trade in 2021, thank you. When we look at the Swiss-Malaysian trade in 2021, it was recorded at about 2.1 billion Swiss francs. Total exports to Malaysia increased by 15%, while imports increased by 9.2%. So Switzerland continues to maintain a trade surplus with Malaysia. Precious metals take the biggest share of exports, followed by machinery and pharmaceutical products. Meanwhile, Switzerland continues to import mainly machinery from Malaysia. In general, the already mentioned mandated Swiss export group expects that growing global demand is set to further boost exports from Switzerland. Swiss companies remain an important investor in Malaysia. According to the recently published figures from MIDA, Switzerland is in the top 12 in 2021 in the manufacturing sector. Let me bring up two bilateral topics I'd like to mention. One is the free trade agreement negotiations between the European Free Trade Association and Malaysia. After a slowdown in 2020 due to the change of government in Malaysia and the pandemic, of course, the delegation of EFTA and their counterparts in Malaysia have met, although in a virtual setting, to continue with the negotiations of the FTA. It will continue hopefully this year again. And another positive development concerns the decision of the Swiss government to remove import duties for industrial products in Switzerland from 2024 onward. It is expected that the lifting of industrial tariffs will benefit Switzerland as an economic location and will further promote the recovery of the economy after the pandemic. And next and last slide, this brings me to the end of my short presentation. Many thanks again for your attention and the possibility to give you a short brief on the Swiss economic outlook. Now we are looking forward to the economic outlook of Malaysia and of course to Anthony's analysis. We are very interested to hear how Malaysia intends to address the many challenges in the country and of course internationally the economy is facing. Thank you very much, Anthony. Please, you have the floor.
Anthony, are you okay?
Hi, yes.
Yeah, over to you, Anthony.
Okay.
Yeah.
Okay,
So for all participants, if you have any questions, please put in Q&A and Anthony will address it at the end of his session. Thanks a lot, Mr. Bardill. Over to you, Anthony.
Right, good afternoon. And again, thank you very much for inviting me on behalf of Ambank. And let me switch off my video to make sure there's no disruption. And well, even before the Ukraine war itself, the Ukraine crisis, we took a view that yes, global business will improve this year, but the global recovery is expected to be kind of uneven. If you just move to the following, and our take is basically this in the case of Malaysia, being seconded to Putrajaya, what we realized is that during the period of the pandemic, fair enough, everyone on planet Earth was focusing on recovery. But what we felt is that recovery without reform is always a waste. And we have gone through many crises before and many recessions before in Malaysia. But very importantly, we need to have reforms. But to have those kind of reforms, you must be very bold. We need to take bold measures. Okay, there must be a strong leadership, very courageous, and there need to be innovation and collaboration. We cannot work in silo anymore going forward. So this is the stand that we have taken, and this is how the government of Malaysia today they are looking at. And very interestingly, this current Prime Minister is very much in tune to this kind of theme out here. So that's why I've just put that this is a new macroeconomic era we are in. One, we recognize that recovery without reform is a total waste for Malaysia. We need to be more innovative. We need to have more collaboration because there are many areas we realize that we can't compete with others, and there are many areas we can also compete. So the areas where we can compete, we'll compete. Areas where we need to collaborate, we need to collaborate. So if we move to the following slide, please. And now if you get into the following slide here, now today what's happening is that we are now in a new dimension. Okay, if you look at this key thing here is that first and foremost, yes, we were expecting recovery, which is going to be uneven. But then, while we factored in the geopolitical risk, but we cannot pinpoint exactly where it's going to erupt and how bad it's going to be. That's something we can't. So unfortunately, what's happening in between Russia and Ukraine has really caused a lot of confusion in terms of business strategy, confusion in terms of policy also. So we are now into a new level of uncertainty. You must remember that 2020 and 2021, the global economy has not come out strongly in terms of absolute recovery. Okay, it's a very slanted recovery. And generally speaking, if I look at from a business perspective, I would dare say that only about 40% to 50% of businesses, probably 40% are operating close to about 80-90% of their capacity. Majority are below 40%. Okay, so that's the kind of challenge. And today we have this Ukraine crisis coming in. My take is that it is happening at the wrong time. If you move to the following slide. So what's happening here is that at the end of the day, if you look at the whole scenario setting, following slide, please. If you look at the global macro and industry themes for a start itself, okay, first and foremost, even before this crisis, we were looking at the economy in actual fact expected to recover. Everything, the policy will be driven slanting towards COVID. Okay, so that is the first thing here. The following slide, please. Yeah, thank you. And fair enough, mathematically, the economy is expected to grow above trend, but it is going to be cyclical. It's not going to be a straight line, smooth sailing all the way for 2022. And because of the reopening of the borders, we expect tourism, which is a low-hanging fruit, to gradually improve. And we were expecting inflation to start rebalancing. That means they should be peaking around the third quarter and then start coming down. And rollback of central banks' policies all over the world. And what is the biggest worry is that the emerging market debt crisis could come into picture. And you must remember that if there was no COVID 2020, if there was no COVID pandemic, nothing, 2020, I was factoring in for a global debt crisis in actual fact. But because of the COVID pandemic, this was postponed. So we have come to a point where the global debt has really swelled up. Emerging market debt crisis is a real concern, especially if the dollar continues to strengthen even before this crisis and with the interest rates going up. So we expect more debt defaults coming in. So countries like Turkey, Argentina, Brazil, and the likes of them, including Malaysia, is in the list, in the watch list. And also this year, we were expecting the global financial market to remain volatile. Why is that so? Because the central banks will be rolling back their stimulus measures, and the biggest worry is on policy error. What happens if they raise interest rate too fast, or they suck back the money, the QE is too fast, or if they do it too slow? So this is the real concern we were facing. And besides that, is the reform paces are going to be different. And also, if you look at the geopolitical tension is always there. Political very much is the US midterm election on that side. Over here is Malaysia. I'm just going to look at two parts of this world only. And risk has always been on the top of everybody's mind. So that is how the whole setting we started off this year. And the industry theme that we were all looking at, whether it's global or Malaysia, is going to be post-COVID normalization. That means, what is the percentage of those businesses who are very badly hit by COVID can come back to 60% of the 2019? 2019 is my base. I'm not looking at 2020 or 2021. 2019 is my reference point. What is the percentage of the businesses can come back to 2019? Say 60%, 80%. We know that there are many businesses, there are some businesses, especially medical related kind of businesses, semicon, they were actually flying up during the COVID scenario settings. So they are all sitting at 90% or full cap, we say. But what about the others? So it's the post-COVID normalization. ESG has become the very buzzword. It's nothing new, but the pandemic has opened up the eyes of everybody, be it the government, be it the businesses, and also the people are increasingly looking at ESG, sustainability. Now, on top of that, input prices have actually gone up. Even during the COVID time, we saw food prices have gone up, raw material prices have gone up. This is all because of supply chain disruption. And as a resulting of that, what could happen is that the view that was taken is that input prices should stabilize by the third quarter of this year. Supply chain can only come back to its pre-2019 level, the earliest 2023, the latest 2024. So you'll still be having inflationary pressure coming in, but eventually it should be tapering off with these adjustments coming to picture. Digital transformation would be the key thing. It has been there before, but it's only that now, because of the COVID pandemic, the lockdowns and the MCOs has disrupted not just the business segment, but also the governments. So what has happened is that the importance of digitalization has come into picture. So we expect greater levels of digitalization pace everywhere around the world, and trade relation. In this case here is more the FTAs and regional trade pacts like CTPPA and RCEP. But what happened now? Let's move to the following slide. If you look at the following slide, the Ukraine crisis came in. So because of this crisis now, my take is now that the world is divided into two. The post-Cold War global order, to me, is coming to a tail end. So it's going to be divided into two, especially with the way the sanctions have been imposed and so on. The question now is, what is going to happen to the dollar in future as a reserve currency for the central bank? We have already seen Russia offloading US papers by 2018. And so they are holding a lot of gold as in physical assets. You must remember, money is made up of two types, inside money and outside money. What is inside money? Inside money is the money we hold in the form of treasury papers, money we put in the bank. Those are all what we call as inside money. Even money that you invest in the stock market, these are all considered as inside money. But the outside money is fiscal money, fiscal in relation to fiscal assets. This is where gold comes back. So my concern now is that going forward, even if this whole conflict comes to an end, let's say today, tomorrow, next week, next month, but the point here would be the potential of US Treasury papers, the potential of dollar is now going to be questioned. Because I would take it as, if you just look at the behavior of Chinese renminbi, in all this situation, the renminbi has been holding up so well and it's acting like it's a safe haven currency today. So what could potentially happen is that China could also be offloading US treasuries. China could also be buying gold. India could be doing that. More and more countries could be doing that because of the way the sanction has been done. So the global trade currency movement could start changing going forward. Could this mean that we're going to use cryptocurrency or bitcoins or what? I'm not too sure about that part here. And now what you have seen is that there's going to be a lot of new alliances coming in. Already, if you look at Euro-Asian Economic Union, this is already Russia, Belarus, Armenia, and Kazakhstan. Could China join them? Could India join them? They are all friendly parties of Russia. Could they join them? Could more countries join? So they'll also be in this group, and they could also be in CTPPA or even in RCEP. So the trading blocks could actually change going forward from here. And the reason being is that because of this kind of tough sanctions, so business would want to look at alternatives. Then comes the next part. This is where I was talking to you about the holding of the US papers as a reserve currency and the zero exposure of Russia. So these are all going to be new wake-up calls that businesses, policymakers would want to see what is going to happen after this. Because we don't have an answer now, but we are already starting to look at a scenario setting here. And definitely it's going to be a fresh blow to the globalization scenario setting here, okay? Because already globalization took a big hit due to the COVID pandemic. We started looking at reshoring and onshoring kind of things here. It started off with the trade war, came in the COVID pandemic, where we saw global supply chain complexity, the interconnectivityness. So people may want to start moving back to their home ground. And if you move to the following slide, now the real worry today, from policymakers' point of view, first and foremost, what's very interesting is that we are talking so much about the Ukraine conflict that we forgot about COVID. Prior to this, we were only talking about the COVID pandemic, the cases and the cases and the cases. That's all. Now, all of a sudden, I feel is that not one single business person, whether it's local or foreign, they talk about COVID. They only talk about the crisis. What's going to happen to the petrol price? Is Malaysia going to be hit by stagflation? If it is so, what are we going to do? I think these are the key things. Already, I am already downgrading the global economic GDP this year by 10 to 20%. For a start, I'm already downgrading Europe's GDP growth by about 1 full percentage point, 1.5, pending the outcome of this whole scenario setting here. And inflation is going to be high. So technically, I'm placing a stagflation for Europe. So there's going to be a domino effect, even on Malaysia, let alone other parts of the world. Although our exposure to Russia is only 0.5% and Ukraine is 0.3%, the direct exposure, but there's always the indirect exposure that plays a bigger role here. The second part is that as a result of this whole thing, my discussion with freight players charges are going to go up easily 2 times more, because and the logistics side is also going to pick up. So you're going to see a very costly cost side factor coming back. So where is this inflation, this stagflation coming is going to be driven more from the cost segment than on the demand side. So because it's a cost segment, then comes the next question, is it worth raising interest rates that fast? Because you only raise interest rates when you find that the demand segment is very strong. There is too much money in the system. But this is now a cost segment that's coming in. And I don't foresee this cost segment to come off anytime soon. Already we have been hit by the cost segment over the last 2 years. And now a third year of a cost segment coming into the picture. And looking at the way Brent is going to be, now with the kind of Russian sanction and all these things taking place, the big worry now is on a very short term, I looked at it as even when the start of this whole conflict, the moment Brent crosses 120, it should be hitting 150, not taking into consideration of sanction on Russian oil, third largest producer. But now with that sanction coming in, let's say it takes a bit of time for US and its allies plus Iran to come into the picture, say May or June, they come in, or later part of April, there's a strong possibility that the petrol price can actually go up to as high as 200, depending on what's going to happen at that war there. Everything is out there. So on average, the first quarter, probably up to first half, I'm going to see more upside to the oil before we start seeing correction coming in. On average, it should be about 130 kind of level this year, and next year should be about 110 kind of level. So this is where it is. So we expect greater clarity on the oil segment to come into next year. This is all taking into consideration of a base case. There's no nuclear war. Should there be a nuclear war, even if it is just between Russia, Ukraine sending short-range missile also, but it can trigger off. So if that triggers off a nuclear war, geopolitical risk will start picking up in all other areas. That's how I'm framing up this whole situation. So it could also come into the Asian corridor. So this is the third part of this whole thing. Supply chain disruption is expected to continue all the way through the whole of this year. Now, the way I see is that normalization of supply chain could only come in 2024. Because with this whole scenario setting here, this will force greater level of reshoring taking place, and all kinds of things will come into the picture. So this is the 4 key elements I'm looking at. And from these 4, there's a lot of knock-on effect into all other areas of the businesses, including the economy itself. So if we move to the following slide, now getting into the following slide, on the Malaysian side, fair enough, the economy, you must remember this country is a very open economy. Trade contributed, just exports contributed more than $1 trillion last year, almost equivalent to the GDP numbers here. Okay, and trade plays a very important role. Only after that comes the domestic segment. So last year we had about 530 billion of stimulus measures. Then we have the 12th Malaysia plan and the budget. So these are things we expect things to start kicking in, honestly, around second quarter this year, earliest. And some of it will filter into third quarter of this year. The country will continue to benefit from the firm commodity prices. CPO now I'm looking at about 5,500 per ton, can go up to 6,000. And we have been benefiting from semiconductors and some of the resource base. And one very important point I'd like to highlight is on the FDIs. You look at the approvals are more than 220 billion. Easily about 70% are expansion, 30% are new investment. So which is a positive sign here. And I expect the country to also benefit from RCEP. We thought that everything will come and concluded end of last year, but what I was made to understand, it will come in by the second quarter of this year itself. And more importantly, with the opening of the borders, we need to open the borders, because if we do not do that, the tourism-related businesses are going to get hit, and the spillover from tourism-related businesses is humongous. I will tell you the direct impact, direct multiplier to the economy via tourism-related direct is 2.7 times, indirect is 2 times. So you're talking about a 4.7 times multiplier out here. It's a huge effect. This is the kind of impact we're seeing. So that's why we have been pushing very hard not to have lockdown, because I was against the MCO 3.0 in actual fact, even MCO 1.0, 2.0, because this is a virus, this is not a bacteria. So what we only need is to vaccinate the people, educate the people, and that's about it. Life must go on. By closing down the economy like this, we saw a lot of social issues, bankruptcies, and trust me, this year is going to be a big challenge, largely because even if we are seeing a pickup in consumer confidence and business confidence, the setback here is actually with the rolling back of the stimulus measures in Malaysia. Our fear is the non-performing loans can pick up, bankruptcies can pick up. What more now with this Ukraine issue? What more with the recent flood that came in? So these are concerns that we have. It's not going to throw the economy off totally, but it can actually cause some form of headwind for the country to move more smoothly. We could have gone up at a speed of 80 kilometers per hour or 90, but now probably about 50 or 60 kind of kilometers per hour. So the domestic demand side, yes, it is expected to improve. But again, do not expect to see a huge growth like about 8%, 9%, 10%. I don't see that kind of numbers. Our take on the GDP, even before this conflict, very conservative base case, we were looking at 5.6 as our best case, but our base case is more of 5% because we are also being supported by the low base of 3.1% last year. So where is the economic growth going to come? It's continuous from the exports, the trade, contribution from the FDIs, domestic, especially consumer activities. Construction, what we have seen is that everything is just the rollover of previous projects. There we need to have a kind of implementation in. And Malaysia should also benefit from the regional economic activities and also the inoculation program. So where are we really focusing on in business? So if you are asking me on your area, from how you want to leverage on Malaysia, one key area that we have pushed really, really hard is on digitalization, technology, and advancement. We are really focusing on this part. Digitalization is going across, not just manufacturing sector, not just construction sector, but across every single sector, including the agriculture sector. So this is where strategically, if you can come in and leverage with us in the form of business, this is where we want to go. If you look at E&E segment, we have moved to high value add. Okay, in the same note, we want to move to high value add largely because we want to reduce our dependency on foreign workers. Okay, officially registered foreign workers is about 1.8 million, but unofficially, some are saying 3 million, some are saying 5 million. We don't know. So we want to face up this. We know the country cannot compete with neighbors like Vietnam, potentially Laos, Cambodia will be coming in. How to compete with them on low-end kind of activities. So we want to move to the next level of activities. So this is where we would love people like you all coming in, bringing in businesses in terms of digitalization and technology. Second part is we are also looking at sustainability because I have been pushing very hard on sustainability and ESG. Europe is the champion. Okay, so now the next way forward is for Malaysia to move into a sustainable world into 2050. We're talking about zero carbonization and so on. It has to work in 3 ways, which the government has also recognized that part. 1, the policy itself. 2, the businesses themselves. 3, the people. On the policy side, we even have told the Central Bank of Malaysia to start focusing on green financing. So we are moving quite aggressively into green financing. At the stock market, if you want to raise capital and so on, or even you want a list going forward, it has to be related to green also. So this is the way. So when we start pushing from the policy side, businesses will come in because the stigma on Malaysia is already quite negative on the modern labor slavery. This issue is not a new issue. It has been there way back in 2013 itself. Now it's written on the wall everywhere. So our concern now is which company is going to be the next to be labeled as modern labor slavery. So this is where. So the sustainability part is another equation we can work together. Especially we are looking at EVs. We are trying to hit EVs by 2030. So we are looking at about needing about 9 billion to 10 billion. This is where we need public-private partnership to come in. Start looking at these 2 areas of economic activities with us. The third part will be on the human capital. Now this is where again, reskilling and upskilling of our people. So this is the third part that comes in here. How do we help to improve our people? You see our youth unemployment, 15 to 24, is about 13%. We are one of the highest in ASEAN today. So this is the third segment we're looking at. The fourth one that we brought into, and the Prime Minister was very pleased, is the third sector economy. This is the informal sector. These are the single mother and all those people working with the NGOs. So this is another segment or dimension we realized where they can contribute huge amount of value add. So this is the next part that we are looking at seriously. Then coming into the changing global landscape, because the landscape is changing. This is back to the bilateral and also the regional trade agreements. How can we tap? Because you go out there to many Malaysians, business people, they don't even know what kind of bilateral trade we have. If I go and ask today, if I call 10 people after this, SMEs or even mid-tier companies, and talk to them, okay, I spoke to these chambers. Do you know we can do business with them? Trust me, they don't know. So that reach and engagement, I realize, has been really bad. Not just with you all, but generally even within the ASEAN, they don't know how to go about. So I think that reach and that level of education has to come in a greater form. Again, this is where we can again work together here. And the last part is the public reforms here. Now, if you go to the following slide, now the following slide basically talks about all the headwinds of Malaysia. Politics is the biggest challenge we have now. Okay, so that's one thing. What happens if this GDP is going to grow below what MOF have projected is 5.5 to 6.5? It's likely to hit below that. Living cost is running up very high. Is there a way we can come in to see how best we can work on the living costs here? Downgrade risk, governance, bankruptcy, all these other things are all there, which I've just mentioned out. So if you go to the following slide, okay, on the following slide, this is something the business affected directly and indirectly from this conflict. So I'm just going to skip this slide. Let me move to the following slide. That is more important for you all. And you can have my PowerPoint slides afterwards. Okay, the business opportunities. If you go to the following slide, the SME segment. The SME segment is extremely important for us. What we are trying to see, if you look at the yellow shades, we are looking at supply chain related business activities. How can we work on this? Vertical integration. These are the areas, medical devices and manufacturing. Another area is on trading. We found trading is giving us good amount of money and halal related. So the SMEs are actually trying to work on this area. So again here, the collaboration comes into picture. Because RCEP, yes, we say on paper, it looks good on Malaysia. But I also keep reminding the SME players that you can actually drown from this RCEP if you are not ready. If you're trying to compete with everybody, you can collapse and die. So today they are talking about collaboration. So how can our businesses here collaborate with your businesses out there so the market becomes a bigger market all the way through? So this is one area. Start looking at collaborative way of doing businesses. And areas where we totally don't have expertise, then you come in and you enjoy the monopoly here. If you move to the following slide, on the following slide, if you look at the following slide, today we are also talking about cluster mapping. Why is E&E so successful? Why is Penang so successful? Because it's an E&E cluster. So now we are looking at cluster mapping. How to bring in cluster mapping and bring the business up. So if you have businesses, let's say aerospace, we are looking at industrial park aerospace. If you have businesses relating to aerospace for point of discussion, then we can try to discuss and see how aerospace we can cluster it all in one particular place. Or it could be something to do with biotech or technology incentives and R&Ds. Okay? So R&D we realize plays a very important role in terms of moving up the value add. So you can also come in to play an R&D kind of system here. So I think these are the areas that the focused industrial park are areas you could actually tap on. These are areas we're really looking at seriously. Besides the bullet point one above that, that's from electronics to semiconductors. Now, if you go to the following slide. So if you look at the following slide, retail businesses, yes, we are looking at recovery, but it's going to be fragmented. But again here, you must be a bit mindful. We have the T20. Because of the COVID pandemic, 20% of Malaysia who are under the T20 category has dropped to M40. And 40% of Malaysians who are under the M40 has dropped to B40. And 40% of B40 has dropped close to hardcore poverty. So it has all dropped. So we hope that these levels of people will start improving going forward. Again, what kind of segment of product you are planning to bring in here, because retail segment will definitely pick up. And you must be quite mindful that the business people, the consumers today are no more the type of the consumers in the past. They talk about cheap quality. They are talking about good quality. So they're willing to pay. So that is the kind of products you slowly have to start reintroducing. Probably if you have a cluster product of tier 1, tier 2, tier 3, if your tier 3 is the real cheap product, probably you do not bring that in. Start with tier 2 and move up to tier 1. And I give you an example of our our furniture. Our furniture used to be tier 3. Today they've gone to tier 2 and some are going into tier 1. So this is the area. Logistic, e-commerce. E-commerce plays a very important role here. Again, how do we tap on this area of business? I noticed e-commerce for Malaysia very much on manufacturing and services, lack on agriculture. So again, this is a part that comes in. Now, and then tourism related here. Now, if you move to the following slide, please. And if you go to the following slide, very importantly, e-wallet is an area we can create that kind of business activities using e-wallet that becomes a way forward. And followed by, okay, property, hire purchase, those are all local Malaysian kind of levels of business. Car industry, yes. If you want to bring in cars in the future, it has to be EV related. Then you are there in the game. BM is bringing in full electric car, the iX40 and the iX50. Now, this is where you can tap into the business activity that is coming in to lay the infrastructure for the charging stations here. We are still on discussion mode on that. So probably by 2030, we hope the Western belt or peninsula, we already have the full charging stations everywhere, probably the whole of peninsula itself. So these are areas you could actually come in and benefit. So if you move to the following slide, if you get into the following slide, what happens here is that if I think the next slide, please. Okay, this slide here, agriculture. I'm going to zoom straight into agriculture. This is very important. We realize food security is a big issue. We are moving into modern farming. We are talking about smart farming. We are talking about organic. Now, modern farming, we have been talking, but trust me, we don't have that kind of expertise and know-how. It's an area we could be looking at. Smart farming is another area we could be looking at, and organic farming, because the lifestyle of the people is actually moving up. It's not going down. And this is where I'm looking at very seriously. And in fact, the next Economic Action Council meeting is supposed to be this Monday, but unfortunately it has been postponed. We are actually focusing on this area of business. So this is an area you could actually be looking at. The others, I think, is okay. If you move to the following slide, please. And if you get into the next slide, I think this is going to be a very interesting slide. This is on sustainability, ESG. You can actually tap here. This is the map for you. Okay, pick up where you can. You look at our high risk, oil and gas, metal and mining, power generation. How can we improve? You can come in the form of consultant on the services segment. You can come in the form of a player itself, something there. The next segment, high risk, we have got 17% contributing to the GDP. Now, we recognize this and we are serious about wanting to move into this order. Because remember, 70% of our exports come from this segment, and we are already committed to a net zero commission going forward. So if you look at building resilience, it is from automotive rise up to cross sector. So I think these are the areas that we can actually work on very closely. Put aside of whatever that is happening around the world, the dust will settle. Domestic politics, eventually it will settle. Whatever said and done, business must move. And you have to try to tap and take advantage of areas where we can make money, benefiting both countries. Because when I look at your bilateral trade, it's quite slanting towards Malaysia, then to the counterpart here, Switzerland. But I think let's work on a more win-win kind of situation. Certain areas you can benefit, certain areas we may benefit out here. So this is the part here. So in a nutshell, if I were to conclude, if you just move to the last slide, in a nutshell, what can happen here is that, yes, we will be having headwinds out there. Okay, following slide, please. So if you look at the following slide, then what happens here is that Malaysia will still be an export-led country. And what we are trying to do is to move away from low end to higher value add. That's the way forward. And we have been successful in the E&E segment. So we want to move to many other segments where we can. And while at the same time, we will continue to benefit, the supplementary income will come from commodities. And next slide, please. And so what happens here is that the FDIs, if you look at the FDIs, we are also becoming quite sticky. We are looking at high value add FDIs. Because of the high value add FDIs, we see the knock-on impact to Malaysia that is in the form of the SMEs and the mid-tier companies here. And the challenges, like I said, for us is more current political situation, one. And point number 5, that is actually the living costs as a current standing here. And the other part is on the issue of governance of this country. So I think I will stop here for now, and I'll be more than happy to take questions.
Thank you so much, Anthony. So participants, if you have any questions, please put your questions in Q&A. At the moment, there is none. So let me start off with a few questions, for Anthony.
Yeah.
So Anthony, you were saying that, RCEP is important. And actually what happened, like, we are supposed to, have the RCEP, concluded early, I would say that early this year, and it hasn't. And you are telling us that now it's moved to Q2. What is stopping Malaysia from having the RCEP, concluded?
Okay, what's happened? I think there's a bit of teething issues. That's about it. We initially thought it will be sorted out by end of last year, but then after that, they told us the latest would be second quarter this year, not first quarter. So that was the thing. I think they're just trying to rectify, clear out certain things, and then just get to the parliament and get it endorsed, and off it goes. But it's going to be there, endorsed. So once that is done, we must position ourselves. The very important thing is we should take it up. We know that it is there. So why wait until we officially announce it and then you start taking?
We don't know, Lavanya, but in reality, we know.
So what's more important is we need to start taking advantage now itself. Start working with others.
How about our neighboring countries? Because RCEP is 10 ASEAN countries plus the 6 major countries. We know that India is out at the moment. What about the other 10 countries in ASEAN, our neighbors who have actually,
most of them,
started?
Most of them have signed in already, signed. I think only 2 or 3 left. Only 2 or 3 left. And we are one of them, the last ones.
Oh, okay. So hopefully the government can do something to expedite this.
Yes.
And can you share a bit on the CPTPP? Is there any news on CPTPP?
Okay, so far, no. I think let's clear RCEP first. We clear one at a time.
All right. All right. Okay. And then another question is, you were saying that the ESG is very important, and understand that the government has, through KPKT has announced the National Circular Economy Council, that they wanted to set up this National Circular Economy Council, where it is now, and is it at the EAC level?
Okay, we are in the discussion already. It has already been presented, and the Prime Minister is well aware of all this, but I think it's about the whole thing is working together. You must remember that the ownership, who is going to be the owner of this whole thing? There needs to be a champion out here. Okay, so who is going to be the owner? I think it's the ownership issue, because there are so many ministries involved. So at this point of time, it's trying to iron out the whole situation. But then again, I would say that it's a little slow, okay, as opposed to what we would have hoped to. The reason being is also the issue of election, the GE. Because what happens if there is a GE, a snap general election, say in August? Okay, when the snap general election comes, then you have a new government coming, new cabinet lineup. It will take some time before we can roll out anything out. So you have to give, if say the GE is August, then plus minus another 3 to 4 months lag period. So probably January next year. So if the GE is next year, then you take about 3 months or 4 months grace period. So while yes, we are working on it, on the framework, but if you are expecting big announcement, I would think it's going to happen probably after the GE. Yeah.
Wow. Okay. Yeah, that will take us back. Yeah, everyone is looking at this, important, topic. I think, not only in Malaysia, right, in the region and in the whole world.
Right, but again, you must remember, we cannot rush into a policy. You see, Malaysia is also known to be policy inconsistent, flip-flop policy. I think we are trying to avoid that. We're trying to get things as right as possible. So by rushing quickly and announcing something and that we don't know how to go about is a challenge. Just remember, during the MCO, we had so much of confusion over the SOP itself. I don't think we want that to happen when you come to this kind of big master plan policy, because this is something ESG is not just confined to Malaysia, but it's the global supply chain. The readiness of Malaysian players themselves to comply with ESG. It has to be there. So for that readiness to happen, we need to educate them. So this is where we have already started. Actually, we have already started, to be honest. On the banking side, on the capital market raising side, we are already educating the people. And even in all our engagements with the association, the small, medium-sized association, the Federation of Malaysian Manufacturers, the media, we have been engaging, telling them this is the way forward. So there are a few things that we have done that engagement. One, the importance of digitalization. Two, the importance of advancement of technology. Three, the importance of ESG. Four, the importance of collaboration with foreign partners. So we have gone into that direction. So the awareness is coming in a better way.
All right, thank you. And my last question will be, where do you see our ringgit is in the next 6 months to a year?
Okay, ringgit, interestingly, will remain quite favorable. On the upside, when I say upside, weakening of ringgit, at best, at worst, it can go is about 421, 425. But more importantly, you must remember, ringgit tracks very closely with the renminbi. The behavior of Chinese renminbi to the US dollar, okay, plays a very important role on the behavior of ringgit to the US dollar. That's one. And also the second thing is on the oil price. Given that the oil price is so strong today, that is a buffer for ringgit because we're a net oil exporter. So net, if you see ringgit is holding on very steadily at 418, 419, 420 kind of level. Logically speaking, it should be 430 or 425 level. So I would take ringgit to be quite steady currency, because currencies for the next few months, you're going to look at to be very good currencies to look at. One, it's going to be the US dollar itself, safe haven status, Swiss franc, Japanese yen, okay? And euro, we are negative on euro for now, but once the clarity on the war is over, euro is expected to strengthen. Likewise, pound to the dollar. But if you look at euro pound, it is more pound favoring, not euro, as at this point, okay? On this region, it is going to be the Aussie dollar. Aussie dollar is expected to strengthen. You see, Aussie dollar is also behaving like a safe haven currency. Also, the Canadian dollar and the New Zealand dollar is playing up quite well. Okay, these are all commodity-linked currencies. So we are quite positive in the near term. But the moment when this whole crisis settles, second half of this year, because euro is so bottled up, it should start improving. Okay, we will start seeing more light on the euro dollar. The US dollar will start weakening. Okay, the US dollar itself will start weakening, so you're going to see corrections taking place. Second half is dust settles, dollar weakening, euro should be on the uptrend going forward. And the Chinese yuan is behaving very well, but the tricky part is that I don't think the People's Bank of China will allow the renminbi to come down anything below 630 against the dollar. They will definitely going to go and intervene. So eventually, you will see even the renminbi to weaken in the second half. I'll share with you on my report next week. It'll be out.
Okay. Okay. One final last question is interest rate. Yeah.
Okay. Interest rate is very challenging. Initially, let's take the Fed. I was looking at 6 rate hikes with a 50 basis point hike in the month of March. But now I've taken a different view, only 4 rate hikes this year, 2 more rate hikes next year. My initial view on ECB was 1 to 2 rate hikes second half this year, but now no rate hikes, nothing. So ECB is going to take more baby steps. And Bank of England, I'm expecting still a 1 rate hike, okay? Probably max 2. Bank of Japan, forget it, nothing. Now, if you look at who is this? China is going to be more rate cuts coming in. They are already on the easing trend. They are the only one opposite to the whole global scenario setting. Expecting them to cut their reserve required ratio by 50 basis points, followed by the 1 year lending rate by another 10 basis points. So I expect more cuts. Malaysia, coming to Malaysia, I actually priced in a 25 basis point hike second half this year, more likely around July, latest is November. At best, maximum will be 2. But looking at the current trend in Malaysia with the living costs going up, the moratorium going to be pulled back, okay, and with this global climate out like this, and also affected by the flood, the cost pressure is really running up. Living cost has gone up. Our fear is that there could be more bankruptcies coming in. So the bankruptcies in the country, we have lifted the bar up. Initially used to be 30,000 and below. Then it's now 50. Today it's 100,000 and below. So anything below 100,000, you are still not declared as a bankrupt, but you could be blacklisted by the Central Bank of Malaysia. So that is a snowball effect. We expect about 10% of the SMEs, micro businesses, to fall into this place. Okay, MSMEs about 10 to 20%. Okay, likely to fall into this situation. Added to that is that yes, we are recovering. You see the unemployment numbers have improved. But having said that, a big chunk of them have gone into self-employment. I noticed the numbers more have moved to self-employment. It's telling me that they can't get a job. So they're doing their own job. So in this scenario setting, high living costs, pulling back, I think it's not too good to actually raise interest rates. So chances are, as at now, current standing, if I look at as at today, there's only a 60% chance for a rate hike, 25 basis point, 40% chance, no rate hike. So this is where we are. Earlier on, I can say hands down, no Ukraine war, 25 basis point up, confirm. So that's how I was looking at it. Today, now I can't say that.
Okay, one of the participants has a question.
Yes.
When do you see the mines industry, MICE, in Malaysia, see a full recovery given the increase in flight and ancillary costs forecasts?
Mines, meaning like
MICE, you know, I would say that this is a entertainment services.
Oh, okay. That one.
Convention, sorry, meeting, conventions, exhibition.
Oh, no, lah. I think this year is going to be a challenge. If you're lucky, fourth quarter, you're lucky only. So it is going to take time because you must remember COVID cases are still high, though we are not talking about it as at this point. Even when we start opening up things, by the time the dust settles, confidence come back, I'm talking about tourism related because this is also related to tourism and economic activity. When you talk about tourism related, we are trying to push more domestic tourists. That's at this point. If you talk about foreign tourists, again, the SOPs and so on, okay, comes into the picture. By the time the tourism industry for Malaysia to come back to 2019 level, trust me, we are looking at 2024.
Right.
So if this kind of conventions, you're talking only next year, but you can start building up yourself now. I'm not going to tell you to do nothing. You've got to start looking at different ways. And probably more and more people might want to go into this kind of Zoom kind of thing for safety reason, cut costs, and so on. So your business model has to change you must try to use more digitalized kind of ambience to create that business. Otherwise, we are going back to the old traditional brick and mortar. I think it will take some time. Most likely 2023. That's where it is. Yep.
Okay, so I think with that, I'd like to conclude. What is your message, one key advice to our participants today, Anthony, before we close?
Okay. I mean, it's not all doom and gloom for Malaysia. I mean, there are lots of opportunity. The slides I've given you all, you can tap on those opportunity. Again, key area we are really wanting to push is agriculture. The modernization of agriculture. In fact, we are very serious about it. We are really pushing into that. There's a big vacuum. There's a big opportunity. So that's one part. If you're coming into the manufacturing, start moving into higher value add, please bring in more ESG related. We would love that. If you're going to get into the traditional, I think it's a no-go. It's going to be very challenging. So we are moving to that. After all, we are complying with Europe standards. We want, okay? So that's the second part here. And the third part of this whole thing here is what else, okay? Put aside the politics, try to work on collaboration. Because trust me, there is going to be a lot of mergers and acquisition taking place after this pandemic, be it in Malaysia, be it across the world. So how do you tap into this M&As coming in? So these are the ways you got to start looking at the dimension of things. Services sector is the same thing. Collaboration is the way forward. I would say it's all going to be collaboration driven. So that's what I'm going to tell you. Opportunities are still, there's a lot of opportunities. And we got to just engage with the people here. But unfortunately, that engagement is still scarce. Okay, so people are still groping in the dark. Our mid-tier companies, you should work with them very closely. They are export-led companies. Okay, we start working with that group. I can in fact introduce the mid-tier association president. I think you all should have those kind of engagement so they can see things, how to automate, because these guys are already going on automation. Trust me, because of the COVID MCO 1.0, some of the SMEs have gone into automation. They were so frustrated. Okay, and that was a big push. So, and we are trying to push the IR 4.0. But the thing here is they don't understand. So you've got to tap this part of the equation, which all the other countries are doing. We are also doing. Put aside what the politics are doing. Forget it. We are doing business here. So I think tap on this part here. That's what I'm going to tell you.
Okay. Thanks again, Anthony. Yeah, it's again an excellent session and presentation from you. So on behalf of SMCC, we would like to thank Mr. Bardill and also our collaboration partner, CCIFM and Camara. Okay, so the slides will be shared with all participants. Have a good afternoon and see you again next year, yeah?
Yes,
all right.
Hopefully face to face.
Yes, we really want to do it face to face. Hopefully next year we can have it face to face. This is the third year that we are running on virtual, right, Anthony?
Yeah,
so yeah, hopefully.
Yes.
Right.
All right. So thanks everyone. Thank you so much. Yeah.
Anything you
Anthony,
all
thank you so much. Thank you so much.
Most welcome. And anytime you can work with me because I'm still stationed with EAC, Economic Action Council.
Sure.
So I'm with the Minister of Economy. Please, whatever you need, you just have to tell me. I can just tell Mustafa. Right?
Yes.
Okay.
Right.
Anthony,
okay.
if I can say something, I would like to say that again, incredible insights. And then my point is green economy and digitization. Yeah, and I think that this is something that even the EU of Sarawak, the EP of Penang, and Selangor have been all asking us our insights. So I would invite you to talk to all these state governments and give them the same speech that you have given to us and see how you can assist them, because it will be of great value. Yeah, we all believe that this, the way forward is green and digital economy, but this is all about collaboration and it's about humans, earth, animals. We all have to do. Yeah. So thank you very much, Anthony.
Right. Thank you. Okay, right. Bye.
All right. Thanks. Bye.
Bye.
Bye.